A very serious message I need to give to all investors in the market right now. In this video, I'm going to take you through some information, some data that you likely have never seen in your life. And what you're going to be able to understand is by going through this data and looking at this information I'm about to share with you, which some of this you're going to want to screenshot, not just save for the short term, but some of these slides I'm going to show you here today, you're going to want to save for the long term. Because what you're going to understand is what's going on right now is way bigger than I think a lot of folks are thinking right now, essentially. Okay. Now, the first thing I want to show you guys here is the latest numbers out of the AAII investor sentiment. Okay. This looks at how investors are feeling over the next 6 months. It's basically a big survey they do. They've been doing this since the 1980s. Okay. Since the 80s, when I was born, they've been doing this. So as of right now, an extraordinarily low number just came in for the amount of people bullish on the market over the next 6 months. The amount of investors bullish on the market over the next 6 months is less than 20%, which is an incredibly low number. This is about half of what is the normal number, okay? Not what a high number is, but what the normal number is. We're at about half right now, okay? About triple that amount is bearish on the market, meaning they think the market's going to go down over the next 6 months. Now, these are extraordinary numbers because you very rarely ever see this number approach 60% outside of major crashes, and you almost never see this number go under 20%. It is extremely rare. This is an extremely rare situation you will ever see in your life in the stock market. This is like something you might see every 10 to 20 years, something like that. It very rarely ever gets to this point in time. Okay. Now, where we're at in the market right now, right, is we're basically off about 33% off highs for the NASDAQ as of right now, 32% off highs for the Russell. We're about 24% off highs in the S&P 500 and almost 20% off highs in the Dow. So nonetheless, it's been a very, very vicious market. If you've been out there buying the dip, you've likely gotten destroyed, to be quite frank. And as of looking at economic numbers, looking at what the Fed's doing, there's not a ton right now for folks to be bullish on, right? They just look out there like, what is good news? There's no good news out there in the market, and that can be a trip. That could honestly be a trap and a trick all at the same time. Okay. Now, you're starting to hear this. Don't buy the dip. Don't buy the dip. And there's two core reasons why this is being said right now. We're gonna go into this really in detail. I'm gonna show you some data and some information that's gonna blow your mind here, okay? But the two main reasons why this is being said is the first one we just talked about, right? Which is essentially people feel like what's the good news we have coming? Like where's the good news at? We don't have any good news. The Fed's hiking rates. We could likely have unemployment going up. The economy seems to be getting in a worse place. Real estate's gonna get in a bad place. So it's like, what do we have to be excited of, right? That's the first part. The second part is people that have been buying the dip have been losing in the short term, right? You've been buying that dip and you lost, right? Let's say, Shopify stock was $1,700 back in November. And so Shopify falls to $1,000. You buy some shares. Shopify falls to $700. You buy some shares. Shopify falls to $500. You buy some shares. Shopify falls to $400. You buy some shares. And Shopify falls to $300 and you buy some shares. And so you're looking out there and you're like, oh my gosh, I'm buying these stocks and they just keep going down and down and down. Shopify is just one example of so many stocks that we've seen fall 40, 50, 60, 70, 80% that folks have been buying, and they're like, what the heck, man? These are great companies. These are game-changing companies. They have these massive runways of growth over the next 10, 20 years in front of them, and yet they just go down and down and down, right? And so that's what leads to this whole don't buy the dip. Don't buy the dip that everybody's chanting now at this point in time, right? Now, there's a great saying by Mr. Franklin, in this world, nothing can be certain except death and taxes. Well, Mr. Franklin, what if I told you there was 3 things that was actually certain in this world, and you missed one of them? Very important, Mr. Franklin, okay? In this world, nothing can be certain except death, taxes, and don't buy the dip in a crash. Because every single crash you've ever been in the stock market, you've ever seen in the history of the stock market, every single one of those folks have said, when you're in the middle of the crash or toward the end of the crash, don't buy the dip. Don't buy the dip. Never seen it where that has not played out. No one's out there screaming, buy the dip when you're in a crash. Everybody's like, don't buy the dip. As somebody that got started in 08, 09, what did I hear? What are you doing with this stock market thing? Don't buy the dip. Like, what are you thinking? Like, you're getting involved with that? Don't get involved with that. Look at how much money everybody's losing. Like, are you crazy? Look at how much bad economic news. Look at the unemployment rate. Look at this. Look at that. Look at how much federal debt's going up. Look at the amount of people on food stamps. Look at and it was just like bad, right? And so you get kind of this clouded view of just like dark clouds and like, oh yeah, I shouldn't buy the dip. I shouldn't do anything, right? Because it looks so bad. And this happens every single crash. The Rona crash had happened, 2007 through 2009 crash had happened, right? When the double dip recession fears had happened. Obviously coming, when we were in the crash of the tech bubble, it was being said at that time. You could go back in time period in every single recession. And when you're in an actual stock market crash, it is something that happens. This is a part of the cycle that you have to understand. You have to go through this part of the cycle. You cannot get to the bottom of a stock market crash until you have gone through this part of the cycle. Until everybody's chanting, don't buy the dip, don't buy the dip. You can't get a true bottom, okay? This is part of life. This is part of the cycle, and there's no way around this, essentially. It is part of the process. And the stronger that don't buy the dip feeling is, the better it is for the market, and the likely lower you're closer to the bottom, okay? This kind of shows you, somebody did this several years ago, but kind of like how investors feel as the market goes up and down and those sorts of things, and kind of like the movement of the market, right? And so, this kind of phase, I'd say like 2009 through 2012, folks buying in that time period, 2013 through 2019, right? This mid 2020 through mid 2021, what was this? This was retail investors got in, right? The public got in heavy during this time because stocks were obviously going crazy. Everybody was really excited. The Fed was pumping money out there. People had stimulus money. Some people had way too much money because they didn't honestly need stimulus money, but then they had stimulus money. So it's like, oh, let's buy some stocks. They're doing good. Let's buy crypto. Let's buy this. Let's buy that. And we get Bitcoin, Ethereum, and Tesla, and ... And so you had this whole cycle go around, right? And then you obviously started having profit taking, starting actually in the beginning of 2021. That's the interesting part. You guys started having profit taking in the more speculative stocks. And then just as 2021 went along, you had more and more profit taking. And, and then it started in the large caps in November, right? And so, you kind of had some like fake out rallies and things like that. But right now, we're closer to this range as of right now. And I would not say there's a bottom in the market right now. I wouldn't predict that. But we're in the capitulation phase now at this point, in getting close to despair phase. Capitulation, when you're talking about S&P, when you're talking about, the NASDAQ down about 33%, when you're talking about countless stocks down, 60, 70, 80%, and I'm not just talking small caps, I'm talking some of the largest companies in the world, you're in a capitulation stage now at this point in time. Just because VIX doesn't go extremely high at a point, VIX doesn't have to go to 40 to 50 for you to have a crash in the markets. Let's understand that. In order to get the VIX to go 40, 50, and this is a big mistake a lot of more advanced investors think. They think, oh, you have to see VIX at 40 or 50 or something like that. You don't. You can see that if you get something that is so freakish out of nowhere that it causes panic in the market, like a Lehman Brothers going under or something like that, right? That's going to cause capitulation, like a once in 100-year health event out of nowhere. That's going to cause capitulation, but you don't have to see that 40, 50 VIX to get a bottom in the market, to get that capitulation. You can get capitulation without that event happening. It's just not going to spike the VIX that crazy. It's going to be a VIX of like 30-ish, 35-ish, okay? And so when you start talking about people saying, don't buy the dip, don't buy it, man, it's not worth it, you're starting to get to that despair phase now at this point in time, right? Where people are just like so down and out, like, don't even buy it, man. It's just so much bad news. It just goes down all the time. It's just, you're getting into that phase now at this point in time when people are like that. At first, when the market first started going down, you heard a lot of still like buy the dip, right? And in 2021, when some of these stocks would go down, some of the small caps, the specs, things like that, some of the mid caps, it was like buy the dip, they're going back, and then they just didn't come back. And then the big caps started falling, and then it was like, well, buy them, and then it was like, don't buy them. And that's where we're at now, where it's like, don't buy, because we're in that despair phase now at this point in time, right? Now, this can come from a few different folks, right? In terms of like, don't buy the dip. The two smaller groups, one can be obviously short sellers, right? That are basically trying to get people to not buy the dip because if you're shorting stocks, like you don't want people to buy in right now because obviously that could cause a situation where, you you lose money, right? So that's a smaller group, but some of those folks are going to obviously always, if you're short the market, you're going to be telling people don't buy the dip, right? It's like common sense that you would tell people that essentially, right? So, but that's a smaller group. You have the folks that are sitting on cash right now that are going to try to time out the bottom, that are hoping things go lower, right? They see a Shopify at $300 and like, I hope that baby goes down to 150. They see, Meta at $160 and like, I want to see that baby go to $100. They see Apple at $120 and they're like, I want to see Apple go to $80, right? And so you got the folks that are cash as well. They're going to tell you don't buy the dip, right? But that's actually smaller groups of people. The most impactful group of folks you're going to see telling you right now, don't buy the dip. It's actually this people. And this, at the end of the day, humans aren't actually evil. Most humans are not evil. Most humans are trying to help out other people. And I call it like the mother phase, right? So if you ever had a protective mom or an overprotective mom, right? And I'm sure a lot of you guys are watching this, your moms were very protective of you. They're basically there in there. They tell you, don't do this, don't do that. Oh, you can get hurt doing that, right? Remember as a kid, you try to do something crazy and like, don't do that. You can get hurt. And then if you do something crazy and they see you do something crazy, like you got lucky, you didn't get hurt, right? That's like their favorite line. You got lucky. Oh boy, you're lucky you didn't get hurt. You jumped off that wall. That was crazy. You could have broke your arm. What are you thinking? Okay. And it's a motherly phase, right? And so most people out there don't want to see other people actually get hurt, okay? You have some of the folks that are kind of like, I call them evil, and they're into their agendas, the short sellers and those sorts of things that are trying to lead you down the wrong path. But you have the other folks that are thinking they're leading you down the right path because they don't want to see you get hurt, right? And they see a lot of people getting hurt. So they're naturally going to say, don't do this because you're going to get hurt. Right? It's no different than if that mom sees the kids, jumping with their bikes off that ramp and, one of them gets hurt and she's like, don't do that, Johnny. What are you thinking? Like, you're going to get hurt. That's the phase, right? And so you got to understand, like, the folks are saying that because they don't want to see you get hurt and they don't want to see you buy, I don't know, what stock can we use as an example? I don't know, Amazon at $100 because Amazon could go down to $70 and you're going to get hurt. You put $1,000 in Amazon and then you lose 30% of your money. Now you're at $700. So naturally, humans get into that motherly phase. Some really enjoy that motherly phase, by the way, that they just can't wait to be, I told you so. I told you don't be messing with those stocks. I told you don't buy the dip. I told you. Oh my gosh, you got some that go crazy with it, right? That's like one of their biggest enjoyments of life is being there to say, I told you. And that's just part of life. That's just part of being a human, okay? And it's part of the markets right now, okay? Now, I got some of the most insane charts to show you guys in just a minute that you've never seen in your life. But first thing I want to shout out is FTX US. That is the official partner of the channel. FTX US just actually announced recently they're getting into stocks as well, which is pretty darn cool. And right now, in a time period where the markets have been crazy, you want to use companies that actually have great financial flexibility and are in good capital positions. And FTX US did raise over $400 million just a few months ago. So they're in a very strong capital position. They have fees that are among the cheapest from everybody out there. You can earn free crypto on every trade over $10. And right now, essentially, you can get up to $100 in crypto when you sign up with my pinned comment down there and use referral code Holy Smokas. And you can set it up right through your phone, essentially, where you actually do like recurring buys. So let's say you want to do recurring buys of something every single week and buy $20 of this or $10 of this or $30 of this. You can set it up like that. So it's pretty darn awesome. Take advantage of that while they're still giving out up to $100 in crypto. That will be pinned comment. And once again, don't forget to use referral code Holy Smokas. Alrighty, guys. So this is extremely important. Right here, what you're seeing in front of your face, screenshot this, okay? Screenshot that baby right there. Because you're going to want to just keep this on your phone, your iPad, your Mac, whatever, for years to go in the future. I actually saved this on my desktop as well. This is a thing of beauty. What you're looking at here is that AAII investor sentiment I shared with you earlier today that essentially is been shown since the 1980s. And this looks at where the market was at in 2009, okay? Now, the market bottomed in March of 2009. It was actually either the first week or second week of March of 2009, essentially, okay? Now, look at the numbers here, essentially. Hardly anybody was bullish for almost all these weeks, right? 24% bullish. We had one freakish week there where I guess everybody got bullish for 1 week and then just not bullish anymore. 27% bullish, 27%. These are very low numbers compared to the norm. Look at that, right? It's like right at about the same as we got right now in the market. That's just interesting, right? So overwhelmingly, people were not bullish. Overwhelmingly, people were bearish. But this is the most insane thing. Basically the week before the market bottomed, over 70% of investors were bearish on the market, meaning they believed the market was going down over the next 6 months. That's the highest number I could ever find on this sentiment, essentially. I could never find a number bigger than that, kind of looking through. There was a lot of numbers to kind of look through there. I could never find a number bigger than that, essentially. Over 70% of investors were bearish. And this marked the moment where the next week the market did bottom and it started going up. So if that doesn't tell you investors have no flip and flapjack and clue where the market's going, remember this one for life, man. The fact that over 70% of investors were bearish when the market was literally the very next week hit a bottom, like, you can't make this stuff up. You can't make this stuff up. That's absolutely incredible. Absolutely incredible that folks were that bearish right when the market bottomed, essentially. But that's what happens. And even the next week, it was still an incredibly low number, right? Only 54% were, 54% were still bearish on the market. So the overwhelming majority of investors were still bearish on the market, even then next week, even after the market had bottomed, right? Isn't that incredible, right? Now, my credentials, I've been investing since late 2008. I've studied economics and markets all the way back to the Great Depression. I've kept track of the stock market every day for 12 years, basically since 2010. I started tracking things on like an everyday basis, what's going on in the market, what's going on with companies, earnings, everything like that, right? I have millions of dollars invested. I have connections. I have a large personal brand in the stock market space. I listen to hundreds of conference calls every single year on the Hungry Bull app, the greatest app in the creation of mankind, Hungry Bull. And yet, I have no clue where the S&P 500 will be in 6 months. I can guess, but I can tell you all it would be was a guess. I have no conception or clue, even with all those credentials, on where the market's going to be in 6 months. And the truth is, no one has any clue where the market's going to be in 6 months from now, 12 months from now, even honestly like 18 months from now. It could be lower, it could be higher. I don't know, S&P 500 could be 3,000 in 6 months from now, or 2,500. S&P 500 could be 4,000 or 5,000 in 6 months from now. I have no clue, even with all those credentials. And no one has any clue, to be quite honest. That's just the way it is. It doesn't matter how much experience you have. It doesn't matter how much money you have in the market. It doesn't matter, what your returns were and this and that. And, you had this big stock, and, you had this stock failure, and, this stock hit it big, and blah, blah, blah. None of that stuff even matters when it comes to that. Your choices in a market like this, right? One, you can act like you're Superman even though you're not Superman, and act like you can, time out the bottom or something like that, right? And the fact is, no one has any clue where the S&P 500 is going to be 6 months from now, the NASDAQ, anything like that. This is just not the way this works, right? So you can act like you're Superman even though you're not Superman, but just remember, all you're doing is putting on an act like you're the one that can know where the market's going to bottom or something like that, because that's not the way this works. Number two, you can buy when everything looks good again. But remember, if you're buying when everything looks good, you're likely at market peak, or the market's going to be massively higher from where it was, essentially. To buy everything when it looks good, you could have done that back in 2021. Everything was looking good. It was like, we got the boom, and the world's going to get back to normal, and look at the markets are moving, and real estate's moving, and the jobs market's getting in a really healthy place, and you had all this good stuff to look at, and yet what did it add up to? The NASDAQ now down 33% from highs. We got a crashing market. Bitcoin's been crashing. Real estate's next up. So look at that. Everything looks so great. And just like that, it flipped and then it wasn't great, right? The fact is, if anything, when everything looks great, that's the time you say, okay, what couldn't go wrong here? I don't know, man. I'm not quite trusting this. Everything looks way too good right now. The market's near all-time highs. Unemployment's at record low levels. Something's got to be brewing here. Something's going to go wrong. Something's got to break, right? That's almost the time when you got to start thinking about those things, right? Three, you could say, I'm never going to buy anything again, and just whatever the stock market does, but I'm not buying anything, right? Or you can keep it simple and you can buy assets at a discount. And this is what I like to do. I'm not going to act like I'm Superman and I can time the bottom. Heck no. I know I can't, and I know no one can. I don't care. how much experience they have. I don't care what their technicals they look at. I don't care about any of that. No one's going to time the bottom. And you know what everybody's hoping for this time? Everybody thinks they have, and this is funny, everybody always like goes through these cycles where they think they got it down, like this is the way. And so now the new thing is once the Fed pivots, that's when the market's going to start going up. And everybody's telling everybody that, which I almost guarantee you is probably not going to end up playing out that way because everybody now knows this, right? And so now everybody thinks, oh, if the Fed pivots, that's automatic, like that's when the market starts going up. And it might not end up actually playing out that way because nowadays everybody preaches that out there and everybody's paying attention to that, right? So you could get a bottom way before that and the market start to move up, then the Fed does pivot. And essentially that just kind of like adds, extra fuel to the fire essentially, right? And so this always happens, like people think they got it down. I keep it simple. I buy assets at a discount. I don't freaking care. When the market's going to bottom, whether it's a month from now or 3 months from now or 6 months from now or 12 months from now or 18 months from now, I'm going to buy assets at a discount. I keep it very simple. It's not stressful for me to buy assets at a discount. And if it goes down, fine, I'll buy some more over the coming months, right? That's what I like to do. Look at this. Look at this, okay? This shows you that bull bear, situation again, okay, in 2020, right? So look at this here. We had, many of those weeks when the market was bottoming, the market bottomed right around the 26th roughly. I think it was the 23rd technically, but let's say it was right around the 26th. Right at that time, over half of investors were bearish on the market the next 6 months, right? And look at how many 50% type numbers you had during that time period. All while the market was about to go on a massive, and I mean massive bull run. The market, the NASDAQ over doubled in this amount of time. It doubled up, right? The NASDAQ at the bottom was like 6,700, it was a little under 7K. And yet a year and a half later or so, the NASDAQ was 16,000. It was the peak, right? So think about that. Look at how many people were overall bearish when the market was about to go on just this insane bull run, right? And, it just comes to show you, like, what do investors even know? This is even more mind-blowing than anything I've shown you, okay? This shows you right when the market was peaking, which was October, November of this year, or not this year, I'm a year behind, in 2021, right? This was all when the market was peaking. The S&P 500, the NASDAQ, the Dow, everything was peaking right here essentially, okay? And look at this, 37% of people, almost 38% of people were bullish on the market. That's a high number. Almost 47% were bullish on the market for the next 6 months, October 21st. Almost 40% there. 41.5%, and look at this 11-11. Almost half of investors were bullish on the stock market for the next 6 months. That's 10 percentage points above where the historical average is. If this doesn't show you investors have no freaking clue where the market's actually going over the next 6 months, I think I just showed you, okay? Remember, screenshot all these slides I just showed you here, all these ones that show you these investor sentiment numbers, because those are important to always remember. And when you see everybody bullish, maybe, in markets at all-time highs, maybe that's a little cause for concern. And when you see everybody bearish and markets crashing, maybe that's a time when you kind of got to think, oh man, might be a little attractive to be a buyer out there in the market. And it just goes to show you kind of what's going on here, right? And so when I show you these slides, this is very important to remember. These people have no clue where the market's going to be in 6 months from now. They put that they're bullish, they put that they're bearish, but really, they got no clue. I think if anything, this is a good contrarian indicator. And when these numbers get way insane, I think that's a time when you got to think to maybe flip the agenda a little bit, okay? Especially if the market's trading out of whack at that particular time. Now, I put this in the breadcrumbs tab in the private stock group Discord chat a few days ago, and I think this is really, really important for everybody. I said I was just doing some thinking. We're obviously in a crashing market the past many months. NASDAQ down like 33% from highs, Russell about the same, S&P 500 in a bear market, etc. New numbers just came out, and only 19% of investors are bullish on the market the next 6 months. Triple that amount is bearish on the market the next 6 months. When you're in a market like this, everyone forgets completely that the sun can even come out. News cycles get slightly better, market starts going green, etc. This is a natural occurrence. As humans, we are programmed to believe what we are seeing will continue. If you watch a basketball team lose every night, you'll begin to expect them to lose every night. night. The flip side is true in a strong bull market or a euphoria market. Everyone gets so caught up in the good news, the excitement, that no one considers, quote, what could go wrong. Right now, we have the opposite going on. Only bad news, things getting worse, is considered. What happens if the news cycle starts to getting a little better? What happens if headwinds working against companies' margins, profits start to work to tailwinds in 2023? What happens if we get some good news in regards to the Ukraine-Russia situation? What happens if we don't get a massive recession, if it's only a baby recession? These are things investors are not even considering right now. Only, quote, things will get worse is being considered. As an investor, it's always important to consider both sides. And that's the way I absolutely look at the market. And so that's why for me, I'm preaching this to everybody out there. You got a 6 to 18 month window in front of you right now. Make as much money as you can, buy as much as you flip and flapjacking can, and load the boat on assets. And the reason I say 6 to 18 months is we don't know how much longer this crash is going to last. But one thing I do know is even when you start to come out of the crash, you still got to buy assets at extreme discounts. It's no different than if you look at, let's say, the 2007 through 2009 crash. It wasn't just intelligent to buy all along that crash. It was very important that as we came out of that crash in 2009, in 2010, and in those future years, that you're also buying as the market started to go up as well. It's extremely, extremely important. You can't let your foot off the gas and say, okay, we're starting to go up, so now I won't buy anymore or something like that. That's a huge mistake. You want to buy as the whole crash happens, as the trough happens, and as you start to go up, you buy as well. That's the way this plays out. That's the way it's done. And, income, extremely important right now. Max out investments for the next 6 to 18 months and be a happy camper in a few years. Much love as always, guys. Appreciate you joining me. Take advantage of the FTX deal. That will be pinned comment, and have a great day.